And we're live. Good morning, everyone. Welcome to Fundraising Talk. This is an amazing platform that's been created for you, the NPO sector, to come together to support each other. We are really privileged today to have Brenda with us. And today we're going to talk about is a nonprofit's financial management healthy? My name is Kelvin Glenn. Myself and Melanie Jackson created Fundraising Talk. And the idea was during COVID-19, we wanted to bring together our community to share and support each other. This has grown into a beautiful movement and tribe, and we are very proud of what we achieved, but we haven't achieved it without your support. So just some house rules to the locals and the regulars, you know the house rules, but to the newcomers, please can we ask that you stay muted and that your camera is off. This is to avoid disruption to the presenters and to dogs barking, kids asking for food. It will happen. We do have a Q&A facility. We do ask that you put your questions into the chat box, and those questions will be monitored by the facilitator, and we will be posing those questions to our guest speaker towards the end of the presentation. If we do not get to all the questions, we will endeavor to answer them offline. Please note for the Poppy Act that this is recorded. So if you want to put a question in that's contentious, that you don't want your name associated to, you can put an anonymous question in. So you just put from anonymous in the drop down. We do record so that the folks that missed the presentation can have access to it. And all the previous recordings from Fundraising Talk are on our YouTube channel. So we encourage you to sit back, relax, enjoy the presentation. It's only an hour, but you're going to learn a huge amount in the next hour. And we hope to be able to part and share knowledge with you, and hope that you will share your experiences to help us all do better at running our NPOs and fundraising. So just some information on the facilitators. So apologies for Melanie Jackson. Unfortunately, due to a family commitment, she cannot make it today. She is devastated. It's the first one that she's missed. So we do wish Melanie well in what she's managing and dealing with. So yeah, it is unfortunate that Melanie can't be with us today. So I am flying solo, but I've pulled in a mate. So Karen, who is a dear friend and has been a work colleague for many years, is helping me today. So thank you, Karen, for facilitating and helping us.
Good morning.
And Karen will be monitoring the Q&A for me and helping us facilitate. So Melanie and I always call ourselves disruptors because we really have disrupted the fundraising and not-profit sector with this initiative called Fundraising Talk. Those are our contact details. We're both consultants. We both have our own companies and have both worked in the sector for more than 25 years. We've ironically worked together, supported each other, worked together on some projects, but both have a wealth of knowledge and experience to share and support you as our tribe. You'll see the WhatsApp icon there. For those of you that are not on our WhatsApp group, we have a WhatsApp group called Fundraising Talk, where we share information, we share leads, we share information about donors, we ask each other questions, we advertise these events, and it really has been a wonderful community. And thank you to everyone that participates. We're running nearly, I think, 180, we had 178 to 180 people on the WhatsApp group. If you want to join the WhatsApp group, there are both of our contact details. Please get hold of Melanie or myself, and we will gladly add you. Just a disclosure, it is not an advertising tool. It is there to empower you as a resource to support you in your work in helping society. Last housekeeping is you'll see the YouTube channel icon and the link at the bottom. And if the link's too long to remember, just Google Kelvin Glenn or Kelvin Glenn Fundraising Talk. You'll see my lovely mugshot on the YouTube channel. But we upload every single one of these presentations onto the YouTube channel. It'll be there for life. And there's also a wealth of previous presentations on that YouTube channel for you to go look up, from boards to storytelling to social media management to monitoring evaluation to fundraising mixes to how to fundraise to everything. So it's a wonderful free tool. Go and use it. And we encourage you to download and use that information. So all the available information is on the YouTube channel. It will be available within an hour or two after this presentation. That's why we record the presentation. Right, without further ado, I am very privileged and humbled to welcome Brenda Kutsia. Brenda was going to talk to us today about financial management and is your organization healthy? Her bio was in the advert that we put out on the WhatsApp group. So in the interest of time, I'm going to jump straight into it so that Brenda can jump onto the presentation, and she will have the opportunity to then introduce herself and get cracking. So without any further ado, Brenda, thank you very much for getting over your time, sharing all your knowledge and wisdom, and being part of our Fundraising Talk tribe and helping us. So over to you, Brenda.
Great, super. Thanks, Calvin. Very nice to be here with this tribe. It sounds very exciting. Yeah, so just to start by a brief introduction of myself, I'm a chartered accountant. I own and run what used to be known as CMDS, which is now known as Zio, and we've been working with nonprofit organizations in all areas of financial management for more than 25 years. So that's everything from bookkeeping through to services to funders, through to financial management advice, training. Yeah, so in summary, that is us and that is me. Yeah, so let's get started then. I'm just going to try and share my screen, Calvin.
Yep, go for it.
Don't mess that up. Okay. And then
there we go.
Hopefully.
We can see it. Perfect.
Okay.
Fantastic. Just tell me when you want to go to polling and we can do the polls. Okay. So just a word, heads up, ladies and gentlemen. We're going to make you do some work today. You're not going to do all the listening. So Brenda has asked us to poll some questions, which is going to be interesting to see the responses. Your responses are anonymous on screen, so the other people won't be able to see what your response was, but the polling will give us an idea of your response. Please participate in the polling. It's really, really important. Please bear with us. It's the first time we're doing polling, so we may have some technical glitches, but we're going to try and get this right. So Brenda, when you need to do the polls, just let me know. Over to you.
Super. Thanks, Calvin. Yeah, so just to keep you on your toes, or should I say your fingers, we're going to do polls the whole way through. And actually, we're going to start with a poll because I just thought it would be good for us to benchmark before I tell you a single thing, like where you think your organization is in terms of healthy financial management. So Calvin, if you can try and pull up that first poll, we can actually go ahead with that. There we go.
Yep. And unfortunately, I've put them all into one, Brenda, so we can ask you to answer question 1. Correct, Brenda?
Yes, that's correct, yes.
Okay. So question 1 is, how healthy is your organization's financial management? And you've got 3 choices: unhealthy, moderately healthy, or healthy. Can everyone see the polls? Okay. I'm not seeing responses yet.
Yes, I can.
Okay. Thank you. Are you able to do a response?
Yes, but
okay.
I don't know if I'm supposed to submit after just one answer.
I'm sorry, Calvin. I think you have to do the full poll to submit your answers. You can't do them all individually.
Okay. Sorry, I made that boo-boo. Brenda, can we ask them to do all the questions and then we can go back and review? How do you want to do this? I should have done it as 5 separate polls. Sorry.
They kind of relate to each section, but I guess we could.
We'll have to ask them to do all of them, and then we'll come back and review as you go through each section. Okay. So sorry, ladies and gentlemen, that's my mistake. So we're going to ask you to answer all the questions, submit your poll, and then we'll make sure it's on screen so that as Brenda's talking through the sections, she can relate back to them. So sorry, everybody, my apologies. Okay, they're starting to come through. Thank you very much, everyone. So 2 people have answered. Come on, the rest of you, you're not, we need your support. We need your input.
We're thinking.
Okay, we'll give it a couple of minutes because there is 5 questions.
Yeah.
You see, as fundraisers, you're going to be ready for surprises. You're going to be flexible. Okay, we're getting responses, and thank you, ladies and gentlemen. Twelve responses, great. We're a third of the way there. 40% voted. Now you guys are really cracking. Okay, we'll give it another 2 minutes. And then Brenda, what we'll do is we'll go back and review each section as you talk about it. Sorry, my mistake. Brenda, can you see the poll results on your screen?
I can. Just to say
Okay.
the last question is actually meant to be almost like a re-evaluation of the first question. So
Yeah. Okay.
yeah, it'll be a bit of a funny one. It should be
Yeah.
the same as the first question at the moment.
Yeah.
Just to tell everyone so that.
Yeah. My apologies, ladies and gentlemen. We learn. I should have set it up as 5 different polls. But it also means we can now use this facility on Fundraising Talk every week, which is really, really helpful. So thank you, Brenda, for helping us with this one.
For forcing you to learn.
Yeah. 5 o'clock yesterday, lastminute.com, but we got it right. Okay, Miranda, have you managed to submit? Because in the chat you said you couldn't submit. Okay, she has managed to submit. I think it was because we were asking you to do all one question at a time. Okay, so 24 out of 32. Come on, guys, we're going to push you to get at least 30 responses. Karen, you can do it as well based on your last experience. It'll be interesting to see.
Perfect. I've done so, Calvin.
Cool. 26. Okay, we're going to give you 1 more minute, ladies and gentlemen, in the interest of time. Okay. Countdown. Okay, I think in the interest of time, we've given 5 minutes. Brenda, we've got 27 responses, which is 84% voted. So are you happy to carry on? Okay.
Yes, I'm happy.
So what I'm going to do is leave the poll there. You can see it on the screen. And is it interrupting your presentation?
I'm just trying to move it out of the way. Oh, no, it's
Okay.
gone. But I can always bring it back if needed.
Okay,
For me,
cool.
anyway.
All right.
Okay,
So,
right.
carry on.
All right, so yeah, so after that bit of a shake-up, let's get cracking. So all of you would have thought about how healthy the financial management is of your organization, and I see that there was a bit of a result where people said it was unhealthy, some said it was moderately healthy, others thought it was very healthy. So just bear that in mind, and at the end, based on what I've talked about, just have a bit of a rethink just to see whether your opinion has changed at all during this talk. Okay, so then let's start by getting on the same page. Oh dear.
Is your
I can't
presentation
even
not
move my
moving?
page. Oh, there.
Oh,
Oh,
there it is.
okay, it's slow. I mustn't be impatient. All right, so this is where we're starting. We're starting with a definition, but just to get onto the same page so we all know what I'm talking about when I say financial management. So the definition there is at the top. That's the planning, controlling, and monitoring of the financial resources of an organization in order to meet its objectives. But there are a number of components of financial management that we can break down just to understand what it actually is. The first one is the one, that orange one at the top, financial planning. So many of you will know that as budgeting, but it is a bit broader than that. So we'll come to that in a moment. Then there's financial risk management, which some of you may think of as being internal controls, which is the way that we address or mitigate financial risks. That's another component. Then at the bottom, record keeping, which is probably the bedrock of financial management. And then on the left in the blue, financial reporting, which I'm sure speaks for itself, but we will deal with that as well in detail. And then in the middle, the owl eyes are actually representing financial monitoring. And the reason I've put it in the middle is just so that you get that impression that the owl is watching over all of these areas of financial management. So financial monitoring affects each area, and if you don't monitor every area, there could be problems that arise that you won't be aware of. So that's just to explain a bit more about what we're going to look at today. Okay, and just to then go to the second poll result, I'm just going to get up on my screen. The question that we asked was, why is healthy financial management important for nonprofit organizations? Pick the answer that you think is the most important. So I see that the majority of people picked, if I can just find it again, B, which is creating a good reputation and credibility, respect and trust with stakeholders. And that's absolutely a very good response. I mean, I would say that's the most important. And the others are actually correct answers. So this is a bit of a trick question. But if you're thinking in terms of the importance of what you're trying to create with healthy financial management, then that, to me, is like the ultimate aim, in a way. Just to go through those different options, 36% of people said healthy financial management is important because it helps an organization or makes it able to meet its objectives. And I agree completely, except to me, there's like a little bit of something missing there. And that is, no matter how well you manage all your funds, if you aren't actually doing the work and affecting the change that you set out to do, no matter how well you manage the money, it's still going to be a problem because you won't be able to achieve the objectives. So it helps to achieve objectives, but it's not the complete answer. 54% of people then said long-term sustainability is a result of healthy financial management, an important result. And that is completely right. I just think that long-term sustainability is driven also by this good reputation and credibility that's created in your stakeholders. So good. And then I'm just looking at the last one without losing it. E, the answer was chaos attracts those prone to fraud. Only 4% of people said that, but they're not wrong, because you certainly do not want to have the reputation of being a chaotic organization. Unfortunately, fortunately not a large number, but there are unfortunately a small group of people who seem to travel from organization to organization looking for chaos and looking for scope for fraud. And yeah, good, healthy financial management prevents that and basically is the opposite of a chaotic environment. So well done. So no one got any wrong answers there. All right, so then let me move on to my next slide. I'll be patient this time.
Okay, it hasn't moved, Brenda.
Yes.
Try again.
Why?
There we go.
There. Okay. Hopefully it won't move again into something else. So the first area that we looked at, that we're going to look at, based on the diagram I showed you, is record keeping. So as I said, this is the bedrock, the very basis, the transactional level of financial management, but it has to start here. So the first thing is that one, in a healthy financial management environment, has a bookkeeper who can actually keep the accounting records of the organization. And some people believe that a bookkeeper can be just like anyone from the street, but that's not correct. A bookkeeper actually has a set of technical skills which are important for them to do their work. And they also require certain personality traits, such as a methodical approach and attention to detail. Those would be the primary personality traits of a bookkeeper. So it's important to get the right person to do this. Also, record keeping has to be systematic. And the key way of doing this is having an accounting system. So clearly, if your organization doesn't have an accounting system, there's going to be a big problem. And accounting systems can be anything from, like top of the range accounting systems, cloud accounting, desktop, traditional systems. Even in some cases, although we don't encourage this, are Excel-based systems. But with Excel, there's always the possibility that because you don't have the checks and balances that you would normally have in an accounting system, that there would be inaccuracies that you wouldn't pick up. And there's also the element of not being able to trace changes that are being made in your Excel accounting system. So it's not impossible, but it's discouraged. If at all possible, there should be an actual software package which is designed for bookkeeping and accounting. Then the next point here is referencing. And this relates to making sure that every transaction is referenced to a supporting document, and that there's always certainty over that link between the two. So if you go to the bookkeeper and say, I want number 123 document, and she or he goes, there you go, then that is a good referencing and filing system. But if you have to wait days for someone to trace a document that relates to a particular transaction, or perhaps the transaction doesn't even have a supporting document, then that is basically the whole trail of evidence falling down and the record keeping system breaking down. The next point here relates to structure. So any accounting system, no matter what it is, has something called the chart of accounts, which is how all the transactions will be structured, and also it drives the reporting that comes out of the accounting system. So what is important here is that the structure is linked to the way the organization operates. So this could be the budget, must be closely linked to the budget, but also to what reports you need to extract for funders perhaps, or for management, to enable you to manage the organization. So that's a very important area. It could also involve things which are called cost centers or analysis codes, ways in which you allocate transactions to projects or programs or funders. So that's also another way of structuring every transaction. And that's important to think that through properly and to help enable those reports to come out at the end. Allocations is the last point here, but often a bookkeeper can only guess where a transaction should be allocated. So what you have to do is to make sure that there is an internal document which allocates a particular transaction to the required budget line item, the project or program or both, and a funder if you do go that far in your allocations. So communicating to the bookkeeper how to allocate transactions is very important. And the one phrase that we use in, I guess, the accounting world is something called GIGO, which is G-I-G-O, garbage in, garbage out. So the way we allocate our transactions right here at the beginning, at this basic level, is what drives what comes out in terms of reporting. So that's very important. And then just to mention the supporting documents, for every transaction, there will be an internal document and an external document. And if part of that is missing, then there is going to be a problem. There could be a problem when someone is trying to trace a transaction. So like a trail of evidence, when management's looking for something to substantiate something, or when the auditors come, whatever kind of auditors they are, and when they're trying to validate a particular transaction, the supporting documents are key to that. And these days people store them in ways that are beyond paper. So electronic storage, whether it's on your own server, whether it's in the cloud, or whether it's actually in your cloud accounting system itself. So there's many different ways to choose. And then the last point that I want to mention around record keeping is this critical need to check based on the fact that nobody's perfect. So for accuracy and also perhaps completeness and validity purposes, you'd want to make sure that someone is preparing bank reconciliations where your bank statements are agreed to the bank balances and the accounting records, also analyses of every balance sheet account, and that someone is reviewing that. So that helps you to make sure that what's gone into the accounting system is completely accurate. And the last point there is something that you will find in a good financial management or healthy financial management environment, where transactions that have been captured into particular budget areas or cost centers or projects the report is generated of those and it's issued to the holders, the budget holders of those particular project areas. And they can then check what's in there and report back for accuracy purposes, whether what's been assigned to their project or cost center or whatever it is correct. it's also amazingly an excellent anti-fraud control. We've actually seen where a fraud was picked up using this method, simply because the person who was defrauding the organization allocated a fraudulent transaction to a cost center and imagined that that person who was reviewing those reports wouldn't notice that the transaction was there, but they did, and that initiated the whole investigation into the fraud. So this is quite a sign of good, I guess, checking of the accounting records. All right, so that is the record keeping. Going to move on now to financial planning. I think we had a poll question about that. So let me just quickly revert to that and see what we said. So our question was, an organization should use the following financial planning tools. So A was organizational budget, and only 17% of people said that. B was project and or funder budgets, and 10% people said that. C was cash flow projections, and 10% of people said that. But last of all was D, all of the above, and 86% of the respondents said that is what they believe it to be. And in fact, I agree with the 86%. All of those things are financial planning tools. And yeah, I mean, I suppose if you don't have funders, which I don't think necessarily makes sense for this kind of sector, then perhaps you wouldn't use funder budgets, but generally you should be using all these tools. So let's talk about that.
Your slides up.
Ooh, sorry,
No,
did you say
on,
something?
No, Brenda, I was saying that the correct slide is on the screen. Carry on.
Oh, great, thank you. All right, so let's first talk about the organizational budgets. And there's a saying that we often present, and that is, failing to plan is planning to fail. And yeah, I mean, planning is vital for the organization. And the organizational budget is a key part of that. And it shouldn't just be about the individual projects and the funder budgets. It actually has to be about the whole organization to bring it all together. And I think one of the primary reasons for that would be that the organizational budget delegates authority to the people within the organization to spend the money. So if you don't have this budget that's approved by the board, people aren't actually allowed to spend money at all. So that is what it means if you don't have an organizational budget. And it's not useful just to have a budget on paper. I once knew of a director who would go and lock themselves in their office and an hour later come out with the organization's budget and submit it to whoever they were reporting to show that the organization had a budget. But that is completely not the right way. A part of the benefit of an organizational budget is the process that one goes through to get to the point where those numbers are on a spreadsheet. And this process could include things like basically getting the budget holders to provide input into the budget. And that helps them to be committed to the process and committed to the outcome and buy into it. But also it helps to get a more accurate picture of the prediction of what's going to happen. And that's also driven by preparing activity plans of the work that's planned for the year, and then basing the RAND values on those activity plans. So not starting, with the end result, actually starting with a work or activity plan. So the other point here relates to scenarios, and that could be that you don't know for sure what kind of income the organization is going to get for the year ahead. I mean, that's very common in our sector. So having different scenarios of the budget, so for example, like the dream budget or the worst case scenario budget, or maybe just like the middle of the road budget, that could all be options that you can do in order to come up with like a selection of plans to follow based on your funding levels. And lastly, and this relates to the little post-it note on the right, don't forget, if you don't record the assumptions and the calculations behind the budget and how it was developed, it's going to be really difficult to report later on the variances against that budget, and also to know when to change the budget, to update it, because you are very unlikely to remember, unless you've got a brilliant memory. I certainly don't have one like that. Within a few months' time, to know exactly what went into that particular number in the budget. And I've seen people, normally if you don't have a calculation behind your budget number, it's because you've done something called a thumb suck, where you've just made up R1,000,000 and said, okay, that's the pot of money we're spending on this line item, which doesn't necessarily make sense. So if it's possible to calculate the budget line item, one should do that and keep the calculation for future reference. And an organizational budget, I don't know if it's impossible, but it's very difficult to raise any funds if you don't have one, because this would be, I assume, what you would present to potential funders in order to tell them what you're going to be spending money on and what you need the money for. The other issue here is the cash flow projections. So sometimes people, they are very focused on the retrospective picture. So the actual spending against the budgeted amounts and the variances there, and that's important because it's about accountability for the budget and also about learning for the future. But without a cash flow projection, there are actually organizations that I've seen that have almost had to close down because they haven't noticed an impending crisis. So suddenly in March next year, we're going to run out of money, but we don't know that. So that's why a cash flow projection is very critical, and why the best kind of cash flow projections in a healthy financial management environment are ones that are rolling for the next 12 months. Even though that's difficult because we often work in financial years, but that would be best practice cash flow projection. And the last thing here, I guess this would be like an advanced financial planning tool, a funding grid, or some people call it a fund analysis or a funder analysis. And that's basically would break down how the budget will be funded. So if you imagine a spreadsheet with columns of budget of funders on top and line items on the left, like how each line item would be funded by a particular funder. So that way, you know, I mean, unless you have every funder is, say, like a core funder, only providing general funds, which would be a wonderful dream situation. But if they are actually funding line items specifically, then you could allocate each line item to particular funders and know whether you have enough funding for every line item. So that would be a very good kind of tool that could be used. All right, so that's the end of financial planning. Oh, and I moved quickly on to financial risk management. Let me go to the poll just to see what our question was that relates to this particular one. Okay, so the question that you all answered, most 87% answered, relates to, does your organization have a finance manual that is used? And note I've emphasized that is used. So 41% said yes. 41% said no, a bit of an even spread there. And 17% don't know, which could be a sign that there isn't actually a finance manual that's being used. Because if you don't know about it, yeah, I mean, that could be a sign that there isn't one. So, okay, there's an even spread there. Let's have a look at the importance of that. I'm just going to minimize that. There we go. Okay, so yeah, it is critical for an organization to have finance policies and procedures, and it's especially helpful for them to be documented on a page, because otherwise everyone will be on a different page. They won't really understand what the procedures are necessarily. Even if it's a small organization, they won't know what to do in particular situations. And a very important part of the finance manual is the delegation of authority section, which will explain what everyone is authorized to do by the board. So who is allowed to contract in certain areas, who is allowed to approve certain expenditure above certain amounts, who is allowed to approve payments, that kind of thing. So those are critical areas that must form part of the finance manual. And there is actually nothing worse than a window dressing finance manual. I suppose there could be worse things, but I mean, that's a pretty bad situation when you have a finance manual that's kept in a drawer, no one refers to it. And sometimes when funders come, they say, please show us your finance manual. You whip it out and hope that they won't notice that it's a complete fabrication. that is not a good situation. And we often are approached to help people to either develop their finance manuals or to update their finance manuals, just because a funder has come and reviewed the manual and has advised them that they think something has to be done to get it up to, I don't know, the latest situation in the organization, or to make it in the context of the organization. So that's a very important area that will lay out all the ways that the organization will address financial risks. And just to talk about some critical control mistakes that relate to financial risk management. And the one is one person controlling the records or controlling an area. So they have access to financial resources such as cash, for example, or making payments. And they also have access to the records, or they're not getting reviewed or approved by anyone else. So always like that lack of separation of duties of one person controlling things, that will result in errors and potentially fraud. Yeah, the classic one here, unfortunately, which some small organizations feel they have to do, is to have only one person releasing payments in internet banking. And that is a very bad thing, not just for the organization, but also for that person, because if they make a mistake, they will be accountable for what they did. And it may look like they have done something fraudulently, when in fact, it's going to ruin their career, but they're actually an honest person who just made a mistake. So that's a key area of exposure for any organization. Then using cash tends to be the thing that if you receive it or if you spend it, it's hard to manage it, it's hard to track it, it's messy, and of course it's easy and tempting for people to steal. So having cash going around an organization is not a good sign, and can be a control mistake. And lastly, I mean, there are other control mistakes, but these are just key examples. For me, this last one is, if there's going to be a fraud committed in a nonprofit organization, or any organization actually, this is how it's going to be done. And that is when the bank account numbers, if you're effecting a payment, the bank account numbers aren't matched to the account holder names. So if you don't have proof that a bank account belongs to a particular supplier, it could belong to anybody. It could belong to a staff member who has just made it look like it belongs to a supplier. And like, this is actually so common that it was just in the news the other day that an Eastern Cape for-profit company, they lost 1.7 million rand when their administrator was able to just pay things into his own bank account, when in fact it looked like it was a supplier bank account, but actually wasn't. It had his bank account number attached to it. So this is very important. So verifying who you're paying is as important as verifying what you're paying for, like on an invoice, but here you actually need to get proof, whether it's a bank letter or something similar, to show that that account belongs to an account holder. And the next issue in relation to financial risk management, and something that is a sign of healthy financial management, is an ethical culture. Now, ethics can be something that's very gray. In fact, it is something that's very gray. It's a gray area. Everyone has a different perception of what's right and wrong. I once went to an ethics lecture where the person said if she saw a 100 Rand note lying on the floor, she wouldn't pick it up. She would prevent her children from picking it up. It basically, that is stealing. I mean, I'm not sure that I would see it completely the same way as that. So as you can see, I mean, there's an ethical question, and it's something as simple as that. So I found it quite useful the other day when I attended a webinar where they talked about having ethical discussions in your organization around practical, like everyday scenarios that happen and what you should do in the context of that situation. So I don't know, like if you spend money, buy something that's of personal nature to you, and you then claim it from the organization. I mean, that's maybe a silly example, but that kind of thing. Like, what would you do in the ethical situation? Or where you received a gift from a supplier or from a funder or from a politician, anything like that. What would you do if that does relate to your organization? So that helps to build an ethical culture. And unfortunately, the internal controls are only as strong as the people who are operating them. So if they aren't computer-based controls, it's always about the ethics of the people who are running the controls. So like the approval process, for example. Right, then this is quite important in the context of financial risk management. And I've seen organizations that this has happened at where fraud has happened and they've attempted to cover it up. So the most important thing to do is never to try and cover up fraud. And of course, to follow the organizational process in terms of appropriate action against the perpetrators and reporting to the funders, especially those whose money has been lost through this process or this fraudulent act. That's very important because funders, they tend to have a network of communication and they could easily hear about it and then, the organization looks dishonest. And, just saying what action you're taking in relation to the fraud, because fraud could actually happen to anybody, it is very important. And there's very few funders, although there is a small, I've heard of at least one, where they would not fund the organization anymore if a fraud happened. But, in general, honesty and openness is appreciated and showing that you're following a process to address it is critical. And then the last point here, which relates to financial risk management is, well, a favorite, that is compliance with financial related laws. And that in this case, I'm going to talk about tax. So I think often, especially as fundraisers, we worry about income tax and especially in the context of trading and also Section 18A. And there's a lack of confidence here. And that's easily explained by the fact that we don't all have like a detailed knowledge of Section 30 of the Income Tax Act or Section 10(1)(cn) of the Income Tax Act. And so it's useful here to seek advice from a reputable, like a referenced consultant who knows these areas if you do feel unsure. And one of the biggest, scariest things is this thing where people are scared that if the organization starts generating trading income, that they're going to lose their PBO status. And that's a very valid fear, but basically if the organization predominantly still carries out its public benefit activities in a philanthropic manner, then it will still be complying with the Income Tax Act and it will still be a valid PBO. And so actually the risk is very low that a PBO could be deregistered for that reason, unless it completely converted itself and held itself out to be a commercial entity. That's just like a very small part of what we normally spend like a day talking about on our training courses. But yeah, that kind of highlights some of the key areas. And of course, there's other areas like the VAT Act and the employees tax related areas. VAT Act can also be something problematic for fundraising because there's a difference between services rendered and trade and donations in the VAT Act. And if you get the two confused, that can lead to problems in terms of if you can claim the VAT, if you have to raise the output VAT and report it to SARS, things like that. So it's important to seek advice with experienced people if there's any lack of confidence there. And that would be a sign of a healthy financial management environment, to seek advice where you don't really know the law that well. Okay, yeah.
Brenda,
so
we've got 10 minutes.
Great, thanks, Calvin. All right, we're heading on to our last component of financial management then. And I'm just going to check the question that we had in relation to financial reporting, which is a favorite of mine. And yes, this is a lovely question. The role of an external auditor is to A, check that there's no fraud. Okay, 0% of people, well, yeah, everyone said, no one chose that option. B, draft the annual financial statements, 3% chose that option. C, ensure that all systems and controls are operating effectively, 10% chose that option. D, express an opinion on the fair presentation of the annual financial statements, 3% chose that option. And E, 86% of people chose all of those options. So yeah, I mean, that's quite common for people to believe that an auditor is actually yeah, like a miracle worker, but they're not. So just to explain, the correct answer is actually D, and D alone. The auditor expresses an opinion on the annual financial statements, on the fair presentation of those financial statements, and that is actually their sole duty to the organization, and their responsibility in terms of what they do as auditors. The other things, they may pick up issues with your systems and controls. In fact, it's great if they do, because and if they don't, also, it's good assurance that there's nothing really bad happening that's affecting the accounting records materially. But there could be still bad things happening that are intentionally being covered up, also that are not material. So auditors are very focused on the materiality in order to express an opinion. So unfortunately, that answer would not be right. And then drafting the annual financial statements is actually not their key role, although lots of auditors do that to, I guess, to add value in their services. It's not ideal that they do, because they then introduce something called a self-review risk. So they're now reviewing their own work because they've prepared the financials instead of someone else doing it so they could review it. So one must always ask one's auditors, if they are preparing the financial statements, how they are addressing the self-review risk. They often separate the department that prepares the financials from the department that audits them. That could be an answer. Yeah, it's still best if someone completely independent, either inside or outside the organization, does the financials, because then the auditors can give a completely independent opinion. And of course, checking that there's no fraud, that is something, yeah, that they don't do. They would look out for it if they stumbled across it, but it's not their objective, unless it's materially affecting the financial statement reporting. Okay, so then let's just talk a bit more about financial reporting. And there's different elements to it. I'm just going to that slide. Once again, it's a bit slow. I'll just start talking while it's loading itself up. Basically, there's different levels of financial reporting. And as you will see when it comes onto the screen, I've shown it as a pyramid with the annual financial statements at the top and the monthly management reports at the bottom. And essentially, it's reports being prepared for each target group. So at the top of the pyramid, when it comes on the screen, you will see the annual financial statements, which are like a general purpose for all stakeholders, and primarily for people outside the organization, although not necessarily, but primarily for people who don't have access to the financial reporting of the nonprofit. So they can't specify the reports that they want. They're not necessarily like a funder who can request in terms of a grant agreement to get funder reports. These are people who just need this general information. Okay, I want to make it come now.
Okay, I'm not too sure why it's not coming. Oh, there we are.
Yeah. So there's the pyramid, and the financial statements are something that is often a subject of discussion for us here at Zio, because we can so easily spot the mistakes that are being communicated. And it's often the language of the financial statements where they use terms like equity and profit, and actually that's not the way you'd want to communicate yourself as a non-profit. You'd want to use the correct terminology so that you can use the financials as a good marketing tool. One example of an excellent way to market the organization is to have a sustainability reserve or fund disclosed in the annual financial statements, and have a note that explains what the fund is for. That is a very good sign of long-term sustainability in the financial statements, and that you can provide to potential funders and other stakeholders. So yeah, if you don't have the financials prepared in the way that suits the organization and the sector, then it's going to be difficult to use the financial statements as a good marketing tool. Yeah, and also they need to be checked by the organization. So one can't just like say, oh, well, someone prepared them, the auditors audited them, So we're not going to really look at them or check them. It is quite important to make sure that they are communicating the correct picture of the organization. Otherwise, it's actually going to communicate something completely different or wrong, which can affect the perceptions of funders. And I've seen that in a particularly shoddy set of financial statements. Then the next level is the quarterly board reports. And they could be slightly they may not be exactly on a quarterly basis, but generally they are. And these would be summarized versions of management reports. And if the board isn't getting summarized versions of management reports, what tends to happen is that they tend to get too involved in the detail. So you don't want your board looking at the 60 Rand that someone spent on postage. You want them to really be maintaining their strategic focus. So that is why those reports have to be summarized versions of the monthly management reports. So things like income statement against budget, showing the variance against budget. Also the financial health of the organization in the statement of financial position, which those of you who are old like me know as a balance sheet. And those two things are quite important to understand the financial health of the organization and also to understand the financial performance. And then what we talked about before, the cash flow projections, looking ahead to the future, that's very important as well for the board to be able to understand the situation of the organization. And often in a good financial reporting scenario, financial indicators will be reported to the board, such as a survival ratio that shows how many months of committed or contracted expenditure are available in the organization. So that would be like a key financial indicator for the board. One of the mistakes that's sometimes made when reporting things to the board would be to not distinguish between restricted and unrestricted funds. So obviously restricted funds that have particular contractual obligations related to them, you may be sitting with a large part of those, but if you can't spend that on your committed overheads or on salaries, then actually that is an important factor to bear in mind for cash flow purposes. So that can be a common mistake that's not reported to the board. Sometimes even boards don't get balance sheets, and so they can't assess the financial health of the organization. And sometimes they don't know any better. They actually don't think that that's important themselves. So it's important to bear in mind that in a good healthy financial management situation, the board is seeing all those reports, but at a summarized level. And the next level, this one relates to specific reports to funders. And I've realized recently that there's like a Murphy's Law relating to this. And that is, the smaller the grant, the more intensive the reporting process and the more you're going to have to spend time preparing a report for them, unfortunately. And the important thing here is that in a healthy financial management environment, the funder reports are going out on time and people actually know when they're supposed to send them. And the other thing is using the templates that the funders have provided. If you don't use the template, then that funder is not going to be happy. So you have to keep them happy at that very basic level. The last point I wanted to make about the specific reports to funders is that you shouldn't be using creative accounting to prepare them. So it's where you create a report and just make up the numbers. That would be the worst case scenario, or just not use the financial records to prepare the report to the funder. And that can result in quite a number of things happening. So maybe if the funder wants to audit it, they can't really, so they can't find the trail of evidence to support the numbers. Also, you could be double dipping, basically reporting the same thing to multiple funders. And I've been exposed to an organization where for some reason, they felt they couldn't rely on their financial records, maybe because they weren't being prepared on time. So they would just refer to the paper files of invoices and prepare reports. A non-financial person prepared the reports. And then they also didn't document where they got the numbers from. So that's clearly a bad idea, because no one afterwards, let alone that person, could figure out like what invoices in the paper file that added up. So that's creative accounting that we wouldn't want to see in a healthy environment. And lastly, financial reports for management on a monthly basis. I've put the little camera down there just to show that those should include, once again, the balance sheet, which is a snapshot of the position of the financial position of the organization at a point in time. Often people don't refer to balance sheets, and then they can't really get to grips with the financial health of the organization. And that includes things like what is owed to the organization, the receivables, what needs to be paid, the liabilities, the liquidity of the organization, how much cash is available, things like that. So that's an important omission. And I think I already mentioned earlier about sending out reports to different budget holders. So having them review the actual spend against their budgeted expenditure. So holding them accountable for their particular pots of money that they have that are in the organization, not just the overall organization itself. All right, so I think we've come to the end.
Thank you, Brenda, and you are dead on time. Ladies and gentlemen, we have got exactly 5 minutes. There was a lot of content. We have had a ton of questions, but I'm going to ask Karen to just pose some questions that we've selected, just for reassurance to the rest of the team or to the rest of the participants. What I am going to do with your blessing is we're going to email the questions to Brenda as well so that she's got them. But yeah, Karen, fire away with the first question. You're on mute. You're on mute. You're on mute. You're on mute. We can hear you. You're muted. Can't hear you.
Oh dear.
Maybe it's your headphones. Oh, there we go. We can hear you now. Try now. No, it's your headphones. Try now, Karen.
Yep. Can you hear me now?
Now we can hear you. Yeah, now we can hear you.
Oh, fantastic. I don't know why my headphones aren't working. Apologies. Okay, so as Calvin mentioned, we did get quite a few questions. So Brenda, I'm just going to jump into question 15 and 16. They kind of work hand in hand. So posed from Lawrence Esteve, I hope I'm pronouncing that correctly. He said, I asked my auditors once his annual financial statements have been signed off for a meeting to review all the weaknesses noticed during the audit. They always accept this, and it does improve the processes. Followed on by Marie Oerdendahl asking, should an auditor give an opinion on whether an organization is a growing concern? Is that going or growing? I think growing concern. It's important for prospective and even current funders to support the organization.
Yes, so I think the first one was just a good point. And the second one is a question that, yes, they do actually make a judgment on the going concern, simply because you might want to disclose things differently if the organization looks like it's going to close down. So yes, they definitely do that, and they talk to management and the directors about what they've done to determine that. It's only about looking ahead at the cash flow for the year ahead.
Fantastic.
So I think that,
and then
Karen, just hold this. I think that the point, ladies and gentlemen, is that when you're looking at your annual financial statements, and as the fundraiser, you should have access to it. It's a public document that is signed off by the auditors. Make sure that this is included, that the auditors have given an opinion that your organization is safe and secure, that you can reassure your donors, because a lot of donors have that question in their application forms of AFS, is it signed off, and what is the sustainability plan of the organization as far as being a going concern in the future?
And just to add to that, Calvin, lately, since the whole COVID-19 pandemic, they've been, it's been required by the auditors and by logic, I suppose, that because there's been a material post-balance sheet event where many organizations have been affected by the pandemic, that there's actually disclosure in relation to the going concern, in relation to how the organization is going to cope with that, whether they're affected or not.
Cool. Karen, last question.
Yes, so the last question we've got here is from Jessica Rich. Is there a national or central ombudsman office contact to report fraud here in South Africa?
I'm not sure about an ombudsman, but there is, a financial intelligence center. I'd have to check that out. But you actually are supposed to report fraud over a certain value Otherwise, I'm not sure to who. Otherwise, you're actually committing an illegal act by hiding it. So,
Yeah.
but if we do have a way to follow up on these questions, I can find out the name of the body.
Yeah.
Fantastic.
So Brenda, what we will do is that if you can get the answers to myself and Melanie, we'll get them onto the WhatsApp group because everyone's on the WhatsApp group. And there's also one or two other questions which we're not going to have time for, which we will forward to you if you can just give 5 minutes to give your feedback. And obviously, ladies and gentlemen, Brenda's volunteering her time and her knowledge and her resources. It's an opinion. You know, she works in the industry, but it's about helping you. It's not about this is a legal opinion. So just putting a disclosure out there. All right. Thank you very much, Brenda. So that was just so much information and so much learning. And I think the takeaway for me is that as fundraisers who are engaging with the donors and the public sector out there that need to reassure our donors in the public sector and have to be responsible for that funding, all of us need to take a much closer look at our organizations, the financial management and controls, and build relationships with the finance team to make sure that we're ticking all these boxes so that we don't have these loopholes in our organization that can impact our funding now and in the future. So Brenda, thank you very much for sharing your wisdom, your knowledge, your expertise, your experience, and for giving up your time. We know that you're busy and we really, really do appreciate that. Ladies and gentlemen, we've got a lot of messages that have come through, so thank you very much. We will get them across to Brenda. If we can answer them, we will. Karen, thank you for helping me facilitate and doing the back end. Ladies and gentlemen, next week, we are talking about good governance. And just like this week, we spoke about how finances are so important, financial management is so important in your role as fundraising. Next week, we're talking about how good governance is so important in the organization to make sure the organization is able to assure your donors and to help you as the people that are going out there to raise the money and report back to donors. So please stay safe. Remember that this was recorded and will be placed on YouTube by this afternoon. The link will be on the WhatsApp group. If you're not on the WhatsApp group, please drop it in the chat and we will add you. And lastly, stay safe. Thank you for joining us. Be well, and we'll see you next week. Bye-bye. 08178978355. And who was that? 066590607. Andy. Wayne.